Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today we're going to be looking at the Parabolic SAR. This was developed by Mr. Wilder, also the inventor of the RSI and several other great technical tools. So this is a feature that a lot of guys will use out there, a lot of traders. The Parabolic SAR will follow price activity like a trailing stop. So whenever the trend is down, prices are moving down and have already triggered the SAR indicator, then you'll see that the SAR is actually above price activity when you're trending down. When you're trending up, you'll see that the SAR is below price activity. Okay. Wilder called this the parabolic time price system. SAR stands for stop and reverse, which is the actual indicator used on the charts. SAR trails price, like I've shown you, as the trend extends over time. The indicator is below price, like I said, when prices are above when prices are actually in an uptrend, and it will be above price when they're in a downtrend. So that's important to know. You can just visually glance at it and see which direction you are actually moving in. Because the SAR follows price, it's considered a trend following indicator. Okay, clean that chart up. The SAR can be adjusted for your own personal settings, and it's actually, you're going to have to do that if you're going to use it, because it needs to be adjusted for individual securities, because some securities are more volatile than others. So anybody who's using the SAR will have to probably adjust it quite often, or find a chart that will actually work with the default settings. This one right here was set on the default settings, but you can change both the step and what's called a max step. Changing the step will make it much more volatile than changing the max step would be less volatile. You wouldn't have as much of a change if you changed the max step. The next chart will show you a change of the step itself, and you can see it will alter dramatically. Okay, here's the same chart, and you can see that I've actually doubled the step, and this has actually given me a completely different trading strategy here. In this particular case, you get a lot more whipsaw. You'd be in and out, in and out, in and out, left and right. So it's less effective in situations like that. So of course you'd want to adjust it to fit the trend following that you're looking at. You're obviously trying to follow the trend using this particular indicator, so you want it to actually match the trend, as opposed to give you all kinds of sideways and up and down and in and out and signals left and right. Okay. The Parabolic SAR works best with trending securities, and that means if it's moving sideways, it's not going to work that great for you. It occurs roughly 30% of the time, according to Wilder's estimates. I mean, you're only going to see trending securities 30% of the time, according to his own estimates. So that gives you some idea of the work you're going to have to do to use the SAR. You're going to have to go find a security that is actually quote unquote trending. So that's important to know. If you're moving sideways, this thing will give you all kinds of mixed signals left and right. As is the case with most indicators, the signal quality, the signal quality depends on the settings and the characteristics of the underlying security. The right settings combined with decent trends can produce a great trading system. The wrong settings will result in whipsaw, losses, and lots of frustration. Okay. Now let me show you a quick little review of how I use it. I don't use it very often, but from time to time I'll find an opportunity that I can use it. So let me show you how I do that. Okay, on this particular chart, you can see that on this particular day, price actually triggers the SAR and then shows it to be reversed to a downtrend. So your SAR now moves to above price activity and follows it lower as price goes lower. When this happens, you're getting a stop and reverse signal. That's what SAR stands for. So to see this signal and just jump on and start selling here, I don't always find it to be the best timing. It gives me a lot more risk because my stop is way up here, and it's not a really great strategy in my opinion. So what I like to do is wait for it to pull back towards the SAR, like you had here, and move lower. Then she jumped up here, okay, much closer to the SAR, gave me a really nice entry opportunity with my stop set at the SAR. So my risk here is much smaller, and that I prefer this situation. If we're going to continue the trend in the downside in this particular case, then this makes a lot more sense. Now I could get stopped out, but if I do, my loss is much smaller than here to here, So I prefer this method, and then simply, take your position. As you continue to move down, then advance your stop lower. Clean that chart up. On the long side, it's the same thing. You won't always get this opportunity, but from time to time this will happen. So you can see that in this particular day here, you shifted from a downtrend to an uptrend according to the SAR, the stop and reverse system. So you trigger that move higher, actually activates the SAR below price, and it begins to follow it higher. Again, I would not be a buyer at this level. It leaves me too much risk, but the next time price pulls back down near the SAR, it gives me an opportunity to buy here with the stop right here. That's a lot better risk reward scenario for me. Okay, and then as price continues to move higher, you can make that money. If you hear traders talking about a bullish SAR reversal, they're referring to situations where price activity has moved to the upside, triggering a bullish reversal from a downtrend to an uptrend. If you hear people referring to the term bearish SAR reversal, then you're hearing the exact opposite, where price activity has now moved lower, triggering the bearish SAR reversal, which has placed the price activity in a downward trend, and the SAR will be above and falling. Okay, now you know. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.